Hello and welcome back to another video lecture series dealing with chapter 17, and we're closely getting to the end here. This is the second to the last chapter. So statement of cash flow is probably my favorite chapter. In this chapter we're going to see obviously we're going to see the statement of cash flow. We're going to see how to put it together. We're going to see why it's beneficial or why it's useful for companies to use a statement of cash flow. And we're also going to look at how that statement of cash flow is formatted. And then finally, once we know how to prepare the statement of cash flow, we're going to analyze it. So in this video, specifically, we're going to cover learning objective 1. So we're going to discuss why the statement of cash flow is so useful, and we're going to look at the format as well. So why is the statement of cash flow so useful? Well, like the other financial statements that we've learned about this semester and in Accounting 1, it provides information to not only the stockholders, but also to the company as well, right? Management inside the company can see where is their cash going. So when we're talking about the statement of cash flow, we want to know what are the sources of our cash, meaning what activities do we have that's generating cash? And we also want to know what activities are using our cash, okay? So as you can see here on the slide, there's really four things that make the statement of cash flow so useful, right? We mentioned that it provides information, but what information does it provide? Well, it provides, again, management as well as stockholders, the entity's ability to generate future cash flows, right? So we're using this statement of cash flows, and we're projecting into the future, right? Can we generate future cash flow? The second reason why it's so useful is that it provides information on the entity's ability to pay dividends as well as meet their liabilities or their financial obligations, okay? One nice thing about the statement of cash flow is that it really shows us, again, our cash, right? What is our cash? So keep in mind, there is a difference between net income and net cash, okay? Net income is a good thing, right? We've talked about that in Accounting 1 and even in this class, Accounting 2. You know, the goal is to provide net income or to turn a profit, right? But just because you have net income really doesn't mean that you have cash, okay? So we're looking at that cash flow, and we're going to be able to differentiate between net income and that net cash that's either provided or used by our operating activities, right? And remember, we said that operating activities are the organization's key or their core reason for existing, right? Think about McDonald's or any fast food chain. What's their core business, right? Why do they exist? Well, to make food, right? They don't, their core business isn't buying and selling assets. Their core business isn't, generating cash from, issuing bonds and selling stock and buying their stock back. So it really focuses in on that net income. We can tell where that cash comes from through operating or by looking at the operating activities. And then finally, the other reason why it's useful is it provides information to the stockholders as well as management on what cash was invested and what cash was financed during that period. Meaning, did we generate cash or did we use cash from investing activities or financing activities, right? So think back to it. When we're talking about investing activities, we're talking about that PP&E, that property, plant, and equipment. Well, if we do a statement of cash flow, and if we do it correctly, which we will, we could see if a company is using cash or if they are generating cash from buying and selling PP&E. Same thing with the financing transactions. When we're talking about financing transactions, we're talking about the company's finances, meaning do they sell stock or issue bonds to generate cash, right? Or does that company retire bonds, or do they buy back stock? And again, we're talking about their own stock to use or generate cash. So that's what goes into the financing activities. This right here is very, very, very important. Okay, this talks about the cash classifications of the cash flow statement. Okay, each one of these activities represents a section on the statement of cash flow, and we'll see that coming up here, right? But when we're talking about operating activities are income statement items, right? What do you mean by that? Well, those are the things that those are the items that we use to determine, do we have net income or net loss, right? So we're going to look at things like supplies. We're going to look at things like accounts receivable. We're going to look at things like inventory, right? As those items change, they're either going to generate cash for us or they're going to be a use of cash, okay? When we're talking about investing activities, we're looking for changes in investments as well as those long-term asset items, okay? Now, you might get confused here and you say, oh, investments. We're not talking about the company's equity or the company's stock or the company's bonds, right? Remember last chapter, we talked about investments, right? And why a company would invest. And we introduced held to maturity, and we introduced available for sale. Those are the investments that we're talking about, okay? So we're going to look at changes in those. When I say changes, I mean, what did we start with? What did we end with? Did those numbers increase or decrease, right? Did I have more than I started off with? Did I have less than I started off with? And then finally, we get into those financing activities. And again, here we're looking at changes in the long-term liabilities, the stockholders' equity items, okay? You got to know this going forward. So I would definitely put that on a note card and really think about it. Sit and meditate on it, right? What are operating activities? Well, those are the income statement income statement items, right? Things like expenses, payroll expenses, utilities. Those are all operating expenses. Okay. So now we're going to look at classifying cash flows, okay? And we're going to look at income statement items first, right? So when we're thinking about operating activities, right off the bat, we need to know, okay, these are these income items that we have, right? Or income statement items that we have through operations, right? Just by running our business. Cash is going in, cash is going out. We're not worried about profit. We're worried about the flow of cash. That's it. We don't care if we have a loss, a net income, net loss. We focus on that when we look at the income statement. Because we're doing the cash flow statement, we're only worried about the flow of cash. That's it. Okay? So what are some things that would be cash inflows from the operating activities? Well, obviously selling goods and services. That would definitely be a cash inflow, okay? Interest received, dividends received from those investments that we have that we talked about last chapter. Those would be cash inflows, okay? What about cash outflows? Well, anytime we spend money that's related to our operating activities, that would be an example of cash outflow, right? If we pay cash to suppliers for inventory, we pay wages to our employees, that's a cash outflow. Whenever we pay taxes to the government, guess what? It's a cash outflow, right? If we have to pay interest, right, for lenders, that's a cash outflow, right? And any other expenses that we have from operating that company, anytime we pay cash, that's going to be the cash outflow, okay? Now, when we're looking at investing activities, right, we need to be able to identify what are the cash inflows, what are the cash outflows that are specifically related just to investing activities, okay? So remember, we classify investing activities as changes in investments as well as long-term assets, okay? So what are examples of cash inflows that pertain only to investing? If we sell property, plant, and equipment, that's going to be a cash inflow, right? We don't care if we made a gain or loss on sale. All we care about is, did we sell a piece of property or a plant or equipment to get cash, okay? We're not worried about the value, so to speak. We're just worried about what type of transaction hits cash, right? Whether it's in or out, okay? Another example of a cash inflow, again, under investing activities, would be a sale of investments in our securities that we hold, right? Securities of other companies. That's very important. So if we have an investment in Coca-Cola and we have, so many shares, they're, either available for sale or held to maturity. If we sell those, that's a cash inflow for us, right? If we collect principal on loans to other entities. Now keep in mind, these aren't bonds, right? Let's say that the restaurant down the road needs some cash. They say, hey, I need a loan. I don't want to go to the bank. I want to come to you. Will you loan me money? You know what? I got some extra cash. Yeah, I'll loan it to you. No problem. I'll charge you interest, obviously, right? That person's going to, or that business then it has to pay me back that principal amount. That would be an example of an investing activity that is a cash inflow. When we're looking at cash outflows, anytime we purchase PP&E, anytime we buy investments in other entities or other corporations, that's an example of a cash outflow. Anytime we make a loan to another entity, guess what? It's a cash outflow, okay? I want to pause right here for a minute because as I go through here and I'm, trying to explain this and whatnot, I envision a bunch of questions popping up in your heads and trying to think of some of the mistakes that I've experienced in the past from other students. What we need to memorize here is what are the classifications, again, operating, investing, and financing, and what types of transactions fit underneath each of those classifications, and is it a inflow or an outflow? Now, to be honest with you, I think that the inflow or outflow part is pretty easy, right? Am I getting cash or am I using cash, right? That part's pretty easy. The important thing is that you understand which type of transaction, if you will, or what type of situation fits under each of these activities, okay? So when we're looking at operating activities, right, anytime we spend money anytime we use cash or we receive cash through our core business or conducting our core business, that's automatically operating activities, okay? What I mean by that is if you say, let's say we buy supplies for inventory, right? We pay for supplies, or we pay for inventory. That does not belong under investing activities. That does not belong under financing activities. That belongs under operating activities. Okay. So if I were you, I would definitely put on a note card. Here's my operating activities. They're all income statement items, right? Same thing with investing activities. When we're talking about investing activities, again, that's those changes in investments in long-term assets, right? You got to know that. What's that mean? Well, did I buy or did I sell any investments or any long-term assets, right? If I sold property, plant, equipment, that's obviously an inflow, right? Because I sold that stuff, I'm getting cash inflow. I think that part's pretty easy. But recognizing that, it's a long-term asset, it belongs under investing, okay? Same thing with the sale of investments in debt or equity securities of other entities, right? We're not talking about our own securities. We're talking about what we invest in other entities. That has to go under investing activities. So whether we buy investments or we sell investments in other entities, it is only an investing activity, okay? And then finally, we get down to financing activities, right? And again, within financing activities, we're talking about changes in long-term liabilities and any changes in our stockholders' equity, okay? What do we mean by that? Well, anytime we sell common stock, right? Obviously, what are we getting? Cash. Cash is coming in. So that has to be a cash inflow, right? If we issue any debt, right, meaning any bonds or any notes, guess what? That's a financing activity, okay? Anytime we pay a dividend, that is a financing activity. When we pay a dividend, that's obviously a cash outflow because cash is leaving the company. Notice that it has to do with the equity account. It's a financing activity, okay? Anytime we retire long-term debt, or anytime we reacquire capital stock, remember that just means that's a fancy way of saying we're just buying our shares of stock off the market, right, into our treasury stock account. That's an example of a cash outflow, okay? Now, when we're putting this together, we need to first know our activities, right? Operating, investing, and financing. We need to know which type of transaction or which type of activity fits under each of those activities, right? Or each of those sections, operating, investing, or financing. But then finally, we need to take note of there may be some very important transactions that do not have any cash implications, right? What do I mean by that? Well, meaning we're going to have a change in either a long-term asset or we're going to have a change in the equity or debt section, okay, that's not going to hit cash, right? What are some examples of those? So you need to know these examples definitely, right? And you also need to know how we report those, okay? So let's just say that we issue common stock to purchase an asset, right? Meaning we're a corporation. We want to buy a piece of mining equipment from Joy Company. And we go to Joy and we say, hey, we need a piece of mining equipment. We don't want to pay cash for it. Would you be willing to accept our stock? They say, sure, not a problem. We work out a deal. We give them, X number of shares of stock. That doesn't hit our cash, right? Nowhere in there did we use cash, but it affects the statement of cash flow, right? Why? Because we have a change in our long-term asset and we have a change in our equity, right? Our shareholders' equity section. We need to report that, right? We either report it as a separate note to the financial statements, or we can report it as a separate schedule, which is at the bottom of the financial statements. Okay. What if we convert bonds, right? Let's say we want to retire bonds, or I'm sorry, not retire them. We want to convert bonds, right? Our long-term liabilities are decreasing, but what are we giving those people? What are those investors getting? Well, they're not getting cash. They're giving us their bonds, right? So we don't owe them any more money. We don't owe them principal, but we're giving them common stock. Okay, that's an example of a non-cash activity, right? If we purchase a piece of equipment, but we issue a bond for that, meaning, what if we go to Joy Company and we say, hey, we need a piece of mining equipment. Would you be willing to take a bond, right? How about we take on debt, right? Maybe we'll sign a note, maybe, something like that, or we'll have a bond that's just specifically for you, right? It's one class of bond. It's just for you, just because we're buying this piece of equipment. Again, cash is not affected here, right, when the transaction happens. However, that's something that's important that is going to impact cash later on down the road. That's something that we need to tell our investors, okay? So keep in mind, and we'll see some examples of this when we go through the significant non-cash activities, okay? So remember I said that there's a difference between net income and cash provided from operations, that those are definitely two different things, right? We can either have a lot of net income and no cash, or we can have little net income but a lot of cash, okay? And this slide really points that out, right? Remember, net income is not the same as net cash provided by operating activities, right? Just because we sell something and we have net income doesn't mean we get cash, right? I mean, eventually we will, but at that point in time, we don't get cash, okay? So what the author did was they took some annual reports, and we're going to compare and contrast the difference, right? The numbers are going to differ compared to what a company has for net income and that net cash provided by operating activities, okay? Look at Kohl's Corporation, right? I don't know what year this is. They didn't tell us. It's probably 2016 or 15, I would imagine. But anyways, Kohl's, right? They have net income of $889 million, right? But what is their net cash provided from operations? Well, they got $1,884 million. Look at Walmart, right? Walmart had low net income, right? 16,669, but the net cash that was generated from their operations was 25,591. Okay. Look at Costco, right? Costco they're huge, right? Look at that net income, 20,391,000, right? But how much cash did they generate from operating? What's that net cash? $3,437,000. Okay. Now, when we're talking about net cash, it's just the difference between the cash we have coming in and the cash we have going out. Okay. When we're looking at the statement of cash flows, okay, we need to worry about the presentation. How are we formatting this statement of cash flow? Well, first we present operating activities or cash flow from operating activities. Then we present cash flow from investing activities. And then we present cash flow from financing activities. Now, when we're looking at the operating activities, there's two ways we can do this. There's two methods we can use to calculate cash flow from operating activities. We can either use the direct method or the indirect method. Now, the good news is that we are only going to focus on the indirect method. But you need to know that there's two ways to report operating activity or cash flow from operating activities. Both methods give you the same net cash flow from operating activities, meaning it gives you the same value. Okay. GAAP just said, hey, you can do it one of two ways. Whichever way you prefer, you go ahead and do. Okay. And in our class now, we're just going to focus on the indirect method. Okay. Now, if I were you, this slide is very, very important. I would commit it to memory. Put it on a note card, right? What's the takeaway from this? Well, the takeaway is this is the format of the statement of cash flow. It shows you all the headings, okay? It shows what the cash at the end of the period is, right? We're using the statement of cash flow here to actually prove our cash balance, right? On the financial or on the balance sheet, we have beginning cash, ending cash. And let's say we have ending cash that says we have $3 million in cash. Guess what? At the end of the day, meaning once we complete this statement of cash flow, it has to match the ending cash value on the balance sheet. Okay? So, notice the first heading, right? Cash flow from operating activities. And then we list all the items that fit within operating activities. Okay? Notice how they're indented slightly. Then once we finish that section, we say, oh, here is the net cash that is either provided or used by operating activities. Notice where we put the amount. It's completely right aligned, right? And then we get to the next section. Hey, cash flow from investing activities. We list them out. Then when we're done with this section, we have our title that says net cash provided, used by investing activities. Same thing with the cash flow from financing activities, okay? You list out all the items that fit within the financing activities. Then you say, okay, here's the net cash that is either provided or used only by the investing activities, okay? Then what you do is you take each section, okay? The net cash from operating, the net cash from investing, and then the net cash from financing activities, and you total those up, okay? We either have a net increase or we have a net decrease in cash, okay? With that change in cash, excuse me, we then factor in the cash at the beginning of the period, okay? We run those numbers, and that gives us the cash at the end of the period. And again, this number right here needs to match the ending balance of cash on the balance sheet, okay? If we have any non-cash investing and financing activities, we can just note them down here, okay? When we come back in our demo video, I want to go through a number of examples of how do we classify each type of transaction. Is it financing? Is it investing? Is it operating? Okay, so please tune back in for that one.